As the Federal Reserve continues its inflation-combating tightrope actions, market moves in December 2022 suggested that investors might be feeling more at ease with the central bank's actions, and that's not necessarily a good sign. At the moment, the Fed was widely expected to reduce the pace at which it was hiking rates to 1/4 percentage point in its anticipating meeting in February, following a similar declaration in December when it was reduced by 0.5 point instead of 3/4. However, things have taken a different turn. The Federal Reserve had recently raised interest rates at its January 31st through February 1st meeting after hiking rates 7 times in 2022. According to the CME Fed Watch tool, the nation's central bank is expected to raise the benchmark Fed's fund rate by 0.25 percentage points. It is likely not the last increase for this cycle, and the odds are high that the Fed will raise rates at its March 2023 meeting as it sets to get inflation under control. Higher rates have been playing out on stocks and cryptocurrencies, and investors seem to be feeling the heat. On the good side, there is less fear in the market as investors seem to be unaffected by the still rising rates for the past few days. Dan Raju, CEO of a brokerage platform Tradier, noted, "With the better than expected recent inflation numbers, the Fed and investors feel like they have some control over inflation. Now everyone sees a path to an eventual holding off of rate hikes." When it comes to crypto, Bitcoin is still down more than 65% from its all-time high, attained in November 2021. Ethereum has also seen a similar drop over the same period as riskier assets have struggled. For Cardano ADA, there has been an outrageous flow of mixed feelings. Stocks and cryptocurrencies have endured high volatility as investors have factored in rising rates, but many still wonder what is left in store for the rest of the year. Probably the next 6 months, with many rate hikes already achieved and perhaps a few more left in the cards. Currently, retail investors feel confident that the Fed will announce a much smaller rate hike, and a bounce is expected to be seen in the tech sector. But unfortunately, the drama isn't over yet. Cryptocurrency has often been paraded as a global solution, whether there is inflation, low interest rates, lack of purchasing power, devaluation of the dollar, and so on and so forth. Those positives were easy to believe as long as crypto was rising, seemingly regardless of other assets. Indeed, cryptocurrencies have been through a lot. It has responded to reduced liquidity as other risky assets did, by dipping when the Fed announced in November 2021 its intention to raise rates, and then throughout 2022 as the Federal Reserve aggressively followed through. 2022 was also a tumultuous year as high-profile blowups of the individual cryptocurrencies and exchanges, such as FTX, have hampered traders' confidence in these digital assets. The crypto analyst said, "The future of crypto in 2023 is going to be driven by how much appetite for risk exists among the investor community. Right now, the market does not seem to have that appetite." ADA traders are presently in limbo as they await for FOMC meeting results. Most traders will likely stay out of the market until the announcement is made. This is due to the fact that the previous FOMC meetings have had significant influence on the prices of cryptocurrencies in previous times. If the FOMC meetings results have a positive impact on the crypto market, the first upside target which ADA's price would reach is 44 cents. Then the next upside target for the altcoin's price will be the resistance level of around 48 cents. Pondering on the negatives, if the Fed announces another interest rate hike, it will have a devastating effect on the crypto markets, propelling Cardano ADA to sink to lower levels. This potential interest rate hike announcement may have had a weaker negative effect on the market compared to previous ones. ADA has been under some pressure lately. A return to sub 40 cent levels, the FOMC meeting minutes, and the general Fed chatter is its recent concerns. ADA fell by 2.72% and the bearish session had left it at sub 40 cents for the first time in 5 sessions. A bullish start saw ADA rise to a mid-morning high of 41 cents before hitting a reverse. It was a busy day for the global financial markets. After the US holidays, US private sector PMI drew interest. The better than expected service sector PMI metrics instigated Fed fear. Recent economic indicators have fueled bets of a more aggressive Fed interest rate trajectory to bring inflation under control. The services PMI supported the more hawkish outlook, with the markets vouching for higher and for longer. Consequently, the Nasdaq Composite Index slid by 2.5%, with the Dow and S&P 500 falling by 2.06% and 2.005% respectively. Unfortunately, there was no input-output updates to distract investors and give them a tiny strand of hope. Having ADA in the cold hands of the broader crypto market, despite improving sentiment towards the Cardano network, the upward trend in the network projects and ongoing network upgrades to improve developer experience, ADA still saw red. The increased US regulatory scrutiny has also added to the bearish sentiment and ADA's comeback to the sub 40 cent levels. Nevertheless, it is a big moment for the global financial markets. With the Fed fear on the rise, investor focus will shift to the FOMC meeting minutes and Fed chatter. The market reaction to the minutes could reveal to the extent to which the Fed will be willing to go to bring inflation to the desired target point. However, the most recent round of US economic indicators could silence any dovish sentiment. At the time of the FOMC meeting, retail sales had tumbled for 2 consecutive months, and the service sector PMI numbers sent mixed signals. Hawkish minutes and Fed commentary would likely weigh on the Nasdaq Composite Index and the broader crypto market. While ILG updates will provide a level of support, the Fed minutes, US regulatory activity, and US lawmaker chatter will potentially be the market's major objectives of concern. Bitcoin and the rest of the cryptocurrency market has held steady following the Fed's announcement that the central bank has hiked interest rates by 25 basis points. This move, which was agreed with market expectations, raised rates from 4.5 to 4.75, the highest federal funds rate it has been in decades. The Fed also began aggressively raising rates last year to cool the record high inflation, but as a result, so many people and companies have felt hurt. The value of stocks, equities, and the crypto assets have been hampered. The biggest cryptocurrency by market capitalization is now down by 66.4% of its all-time high, and the head of research in CoinShares, James Butterfield, shared that the Fed's statement added, "Nothing new to really move the markets." He added that the Fed's chair Jerome Powell has tried to express hawkishness by stating that the job isn't done, but the markets are not buying it. Bitcoin has typically followed the stock market because it is a risk-on asset, and it directly means that its price can be volatile, just like equities. Investors have sold risk-on assets as the Fed has upped interest rates to get its 40-year high under control. Plus, when interest rates are high, investors prefer safe havens like gold or the US dollar. For Jerome Powell, the job is not yet done. Although there seems to be no ray of hope for Cardano ADA, belittling the potential of the cryptocurrency can equally be a regretful decision. The stakes are still high, and if the bulls return anytime soon, the tide might change. This might not sound convincing, but let's take a look at Cardano's most recent milestone, the Valentine's upgrade. The upgrade was set to bring enhanced cryptographic features to Cardano while improving cross-chain development on Plutus. According to a Cardano developer and code maintainer, this upgrade is quite interesting with a heightened emphasis on interoperability. Interoperability is a key for blockchain growth as more dApps are built on Cardano. They mustn't be siloed to just one ecosystem, enabling users to interact with different blockchains and access a wider range of services. Such a feature on Cardano would permit developers to build applications that link Cardano with other blockchains, and would in turn give users access to other blockchains to relative conveniency with financial services offered by Cardano dApps. This will likely improve the utility of the Cardano's native token, ADA, and further give it a little push to rise to new highs in the market, and perhaps outperform Bitcoin and Ethereum. I mean, it is about that time. In addition, the locked value of tokens on the Cardano-based dApps have spiked over 100% since the beginning of January to over 110 million, indicating high demand. While this is not enough to provide for the needed succor of Cardano investors, it is important to remember that the ride with Cardano is a long-term one. The bears may have taken over, but no one knows just how things will unfold later on. I mean, what if ADA continues to plummet? Then the famous words of Warren Buffett might be helpful here. Opportunities come infrequently. When it rains gold, pull out the bucket, not the thimble. But of course, what are your thoughts on this? Let us know in the comment section below. We'll see you in the next video, but before then, check our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.